please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Good morning and welcome to Bazaar Morning Call. I am Anuj, with me of course Surabhi and Lata as well in a bit. We are preparing ourselves for a bit of a weak start. One thought that yesterday the market made a bit of a bottom, but today the market has to deal with fresh global negative cues. Good morning Lata, good morning Surabhi.
Good morning. Sorry for my delay. Well, yes, I thought it's the events of the day that is going to capture the imagination of the market with the PMEAC and more importantly the GST Council. So while I agree with you that we are having a fairly negative start coming from global markets, crude going back to the $64 mark, 63.89, not terribly positive for us, but the events of the day is likely to shape us. SBI results can likely shape us. If Axis Bank announces its board meeting results before market hours, that can shape us. GST Council and PMEAC, my sense is going to come after market hours, but the anticipation will always be there. So hopefully all that will provide a flow.
Absolutely, Lata. Good morning. And I take your point, and I'd like to be an optimist today. Maybe it's the color that I'm wearing. But, the fact that we had some very good numbers yesterday, particularly from Tata Motors, some of the consumer companies, maybe that makes people feel a little better. Aurobindo, I mean, we'll discuss some of these numbers as we go forward. But earnings have given us little to really worry about over the last 24 hours. And not just that, I just want to add one more little point. I mean, if both of you remember, there was a tax circular, a CBDT circular about December last year. It had really raised the market's sort of heckles, so to speak, because indirect transfer provisions were going to be levied on investors which are investing in India-dedicated offshore funds. So a whole clutch of FIIs, if you remember, had gone to the finance ministry protesting. It was put in abeyance just before the budget last year. Now, what has happened just 2 days ago, one day back, is that there's a final notification that's out, and it's clarified everything very clear. As long as the fund is paying tax, the offshore fund, whether it's based in Singapore, Mauritius, wherever it might be, as long as the fund is following the tax laws of the land, the investors in the fund will not be taxed. They can redeem, withdraw, buy, sell and do whatever they seek. The taxation is at the fund level. So no multiple layers of taxation, whether it's a feeder fund, fund of funds, whether it's a single layer fund. So at least that sort of a comfort has come in from the North Block. But anyway, those are some of the positives that I've highlighted. What does it boil down to for the market, Anuj? Because yesterday itself, the second half, we saw the sluggishness coming in.
Yeah, morning Surabhi. Sorry to temper down the bullishness. I don't think that's an issue today, frankly. It's no, I mean that's not the reason the market was falling.
No, not at all, not at all. I'm just saying that it's it's some clarity. That's
maybe. But what right now what's happened is that the global picture has turned a bit murky. And while we thought yesterday that the worst, the market is now going through that phase of taking out the weak hands. It would have invited some more weak hands yesterday after the last hour rally. So it may want to take that out. Today it will open below the 20-day moving average of 10,294. So now the 50-day moving average of 10,100 should become sacrosanct support for the market. Having said that, this is just from the trader's point of view, from the day trader's point of view. From the day trader's point of view, this is market which is now a sell on rally market. You're making more money by selling the rallies, and you don't need me to tell you. You can see that in the internals over the last 2 or 3 days. But that does not change the basic texture of this market, which is on the upside. And if you buy in this zone of 20 and 50-day moving average, sure, it can break that as well. But going by the anecdotal evidence, this has been the zone in which you make money. So I think some more weak hands would be cleaned out. Early in the series, FIs have been shorting aggressively for the last 2 days now. In fact, yesterday also in index futures, there was unwinding of 6,000 longs and 8,700 short addition along with cash market selling. So the good point is that means that the market now has cushion of short positions. I think what this market now requires is global stability. 2 or 3 days of global stability, I think, and this market will be prepared. It will have enough ammunition on the short side to see a short covering bounce, and that may clearly be helpful for the market. For today, I think the clincher would be SBI's numbers because they'll come in market hours. Axis, of course, as you said, will be post market. SBI comes in market hours. It's rallied a lot. there's a whisper number that, the gross NPA number would be actually down. I don't see how that will come, and the stocks rallied a lot. So that's a bit of a risk factor for
No, I believe SBI's numbers can be good, not because I have anybody whispered anything in my ears, because they took a huge kitchen sinking last time.
Yes.
And my sense is they wouldn't have only sunk the kitchen of their subsidiaries, they would have put in some of their own, wrong ones into that basket. As well, the Aircel Arcom deal broke off on October 2nd. So that's the third, that's this quarter. So they still get a standstill for the September 30th quarter. So they don't have to, provide anything extra. If needed, it will be only in this quarter. So there's a very good chance that SBI's numbers are good. But the more fundamental point is what Anuj says. This is a global bull run, and therefore, look at the way Nikkei is obeying what the
Dow did,
the Wall Street is dictating. So, we can't step out of that. And we were actually in a fine spot because of the banks. The recapitalization had finally brought the FIIs as buyers. But when crude climbs, then India is the first market they will sell. Even if it is a global sell, we could underperform because we are a little more vulnerable to crude than several other Asian markets like, say, Malaysia, Indonesia. So we have to keep that in mind. The global setup today is not in our favor, even if SBI is helpful, and our eyes will have to be on crude. If that doesn't oblige, and the 78 becomes 63.88, then even with very good SBI results, yesterday's FII sell number should rankle in our mind. They were buyers from last Wednesday, and crude has kind of spoiled the party for us. So that should be on the table.
I was actually reading the hotels being booked in Riyadh to hoard up all the people who are being arrested, all the rich and mighty of Saudi Arabia. But anyway, we'll get you more on that later. Right now, a quick look at what our wise experts have to say as we get into trade this morning. Sakti Siva of Credit Suisse says, with 53% of companies in Asia Pacific ex-Japan having reported so far, 2018 estimated consensus EPS has been revised up by 1.5%. She says while Korea continues to be associated with the biggest upgrades of 3.6% so far this reporting season, a surprise second is India with 2.3% upgrades after 38 companies have reported. She adds the key issue for India is whether these upgrades broaden beyond Reliance Industries. She says at the sector level, only 4 sectors, that is healthcare, telcos, utilities and consumer cyclicals, are still seeing downgrades to 2018 estimated consensus EPS earnings. Really, that is the silver lining this Friday morning. Willing to take that?
Oh, absolutely. Today, big earnings day. The SBI is only just the mightiest of them. So let's get your money market views. On that note, Bhaskar Panda of HDFC Bank says concerns over the final shape of the US tax reforms weighed on the dollar index, and it may have a temporary impact on emerging markets. As far as USD INR goes, the pair might open higher, trade in a range of 64.90 to 65.10 for the day.
And on the bond market action, where yields remain elevated, Bhaskar Panda says the 10-year benchmark bond yield is inching up towards the 7% mark. For today, he adds it may trade within a range of 6.92 to 6.95%.
It's Friday, and there can always be an OMO announcement, open market purchase. So that's a niggling worry.
Okay, that's a niggling worry. But the bigger worry for the market is what's happened overnight to the US market. Here's Nigel with the world view.
Well, there was red on the screen overnight. The US markets, in fact, the Dow ended down by close to around 100 points. At one point of time, that market was down more than 300 points. In terms of the big losers, well, overnight we had McDonald's. That was down close to around 2%. American Express as well was struggling in trade yesterday. And those were really the big drags on the index. Why was the index lower? Well, there were fears that, in fact, now the Senate Republicans, they may not bring that tax cut as soon as anticipated. Maybe it'll be pushed forth to around 2019, and then in fact we'll see that tax cut come down from around 35% all the way to around 20%. So that's what worried the US markets. European markets as well ended in the red. There were a few stocks really that did drag down there. Basic Resources, they got hit overnight. In fact, ArcelorMittal was down close to around 3% overnight. The European Union Antitrust Department there is looking into the deal with Ilva and what kind of impact it can have on prices. So that was one stock that was under pressure. For Germany, really, Adidas posted a strong set of numbers, but that stock saw some big profit booking was down in trade, and Burberry as well was down close to around 10% overnight. They said they're going to be refurbishing the stores, and the market didn't like that. Well, coming to the emerging markets then, they've not been waltzing to the same tune all of this week, and that was the case as well, because the Russian index ended higher with a gain of around 1%, while in fact the Brazilian index was lower. Asian markets, a sea of red this morning, all of them trading in the red, and the SGX Nifty is indicating a downtick. Back to you.
Okay. Parna, of course, we will keep getting you all the action from day 2 of that meeting today. But the stock of the morning will perhaps be really Tata Motors after the auto major reported a 3-fold jump in net profit, thanks to strong performance coming in from its UK unit, Jaguar and Land Rover. In a conference call last evening, ace investor Rakesh Jhunjhunwala was quizzing the Tata Motors management on forex hedging losses and whether they will reduce going forward. Here's an excerpt.
You will incur about, depending on the value of the pound, about 1 to 1.2 billion of foreign exchange hedge losses, right? Now next year you have the rate at which you have hedged will come down, and the pound has gone up in value. You know, suppose for this quarter you have hedged at an average rate of 1.45. As the time passes, the rate at which you have hedged goes down, comes to 1.3, 1.29, and the value of the pound goes up. So does not mean that next year, if the currency rates remain what they are, your hedge losses will be substantially lower?
The short answer is yes. If I referred you to the page that Ben was describing, which is a backup page, somewhat, what it has, the bottom 2 lines on the page, not the exchange rates, but the lines that are titled Total Pre-Tax Hedge Reserve and Current Portion of Hedge Reserve. What you see there is, what you see there is the total pre-tax hedge reserve is 1092. That's £1,092,000,000 is the outstanding present value at today's exchange rates of the hedge losses we have still to run through over the next couple of years. If you just moved across that chart to what it was 1 year ago, that number was £2.4 billion. So in other words, you can see that for 2 reasons, the size of the outstanding hedge losses is reducing just as you describe, and it has reduced for 2 reasons. One, because the passage of time means that we work through this hedge position quarter by quarter, and 2, because the exchange rates have changed also compared to the prior year, which means that the value of the outstanding hedge losses has actually reduced also a bit because of exchange rate.
So what rate have you marked?
Pardon me?
You marked the losses at 1.34?
1.34, yes, on the pound to the dollar, yes.
Right. That means.
And we've also shown there. Sorry, just to finish, we've also shown there underneath the 1092. We've shown the current portion, and that's 793 million, is what we expect at these exchange rates to mature over the next 12 months.
Right, so which is substantially lower, because over the previous year, about far more is matured, no?
Yes.
So that means next year, interest rates being what they are, right? The currency rates being what they are, your hedge losses should be substantially low.
Correct.
If exchange rates stay where they are.
Yeah, and that's a very big plus for you, for your profits, for your cash flows.
Yeah, but I think the one thing I'd just qualify is that to the extent exchange rates change, it can be bad news on the operating side as well. So it's always been the case that the hedges have balanced out against operating exposure. So if the pound does strengthen, we'll get good news on the hedges, but bad news on the operating exposure.
Fine, global cues are looking challenging. There is no denying that. Let's now talk about stocks. You can see the SGX Nifty, it's still struggling with a 0.5% decline. That is the picture across Asia today. But now let's just focus on stocks to take a look at what the top 10 list of the morning could be like. Good morning, guys. Happy Friday to all of you. Our whole team is here as always, but let me start with Anuj. Anuj, what's on your radar? You had flagged off GST yesterday. What is it today?
Yeah, we'll talk about GST as well, but before that, my sense is that today is a weak day for the market, and in particular NBFCs. That's the space where you've seen some selling. Bond yields, of course, has been an issue. And I think L&T Finance stock, just take a look at that stock now. It's trading below the PSU Bank recap day low. And, we had discussed this possibility on some of the NBFCs, at least going through some correction. Very weak stock now, trading below its 20 and 50-day moving average. In fact, 20-day moving average set to fall below the 50-day moving average. So just keep an eye on this one. And I think on the same, along the same lines would be Reliance Capital as well. So it's a stock which is going through a derating of the holding company discount. I think Varinder flagged that off on the day Reliance Asset Management had listed that now if you want to play the largest piece of the pie, in that case you can play it directly via the listed stock. So why do you want to go through the holdco? And I think that's the reason, and there's aggressive delivery selling as well that we have seen in this stock. But it's not all red, in some green as well. I think that this GST Council will keep some stocks active. The stock that's looking interesting is Mirza International. It's a stock which has seen big surge from 20 and 50-day moving average, huge delivery buying. I think we spoke about sanitary ware, a couple of other FMCG products. I think there's reports of leather products also, especially the ones where you have 28% GST. I think that also being given relief. That's a buzz in the market. So I think that could be interesting for a stock like Mirza International. So that's something to watch out for as well.
Okay, all right. So those are a couple of stocks that are on Anuj's radar this morning. Let's actually now talk about the big number of yesterday, because now we've got brokerage commentary on it. Stock of the morning, really. Tata Motors, blowout numbers and some great JLR margins, Naveen. But does it mean price target increases as well?
Not much of price target increase. Remember, yesterday after the blowout numbers also, the stock didn't react the way it was supposed to be. But if you see the brokerage commentary, more or less it's sanguine. So if the biggest highlight what the brokerages believe is that the JLR margins, they came in at 11.8%. What the brokerages believe is this is purely on the basis of two main reasons. One being that the forex losses, that stands to be reducing. Remember, the management just answered Mr. Junjunwala also, we had played that bite. So that is one key reason. The other one being the operational efficiencies, both at JLR as well as their standalone business. Cost cutting has been done, pruning has been doing by the company. On the other hand, the consolidated revenues, that also is a big positive, 11% up, led by both JLR as well as standalone business. For H2, the brokerages believe there have been, they are cautiously optimistic, but still there are a few tailwinds, like the model mix, that seems to be improving for JLR, so that will be leading the overall H2. On the back of this, Bank of America Merrill Lynch, they have a buy rating on the stock. Credit Suisse has an outperform with the target price of 560. JPM, that is JP Morgan, they have an overweight rating with a target price of 485. The only sell call is by CLSA, and they have a target price of 395 rupees. Back to you.
Thanks, Naveen. Yes, CLSA has been the lone one in this stock. They have been having aggressive sell call, but most have upgraded the price target. But Lata, Axis Bank, is the news now fully in the price?
Well, I would think so, because it's risen about 16%. I was checking the day we broke that story that Bain Capital and other Ps are looking to raise capital. Today is the day. Axis announced it by saying that the board meeting is to raise capital. And if you calculate 5% of equity, it would come to about 6,400 crores, and that will raise the Tier 1 ratio from 12.04 to 13.2%, and it will raise the book value. It's an estimate, of course, FY18 book value from 247 rupees to about 253 rupees. But the stock also has risen from about 475, 480 on the day the news broke to 540 today. So that is about a 16-17% rise, which is exactly what the rise in the book value is. So I don't know, today actually on news, you buy on rumor, but you would look to even sell on news, especially because now crude and interest rates are against all banks.
Okay, fair point. So Axis Bank would be interesting. The other stock which is interesting is the one from the index pharma, which has outperformed most of its peers, and that's Aurobindo Pharma, and the numbers look good, Ekta.
Yes, absolutely. I think the numbers are above expectations, especially on the revenue and the profit front. The revenue is up around 17-odd%. The margins have expanded to 25-odd%, and the profit has grown around 29-30-odd%. Though, two things that I would want clarity on. Remember that the revenue growth has been led by the US markets, up 21%. What did growth look like ex of Venvela generic, and what is the guidance from the management? Europe was up 37 odd % or thereabout, and so strong growth coming in from other markets such as Europe as well. And what led to the profit growth? Because the debt has risen this time round versus what it was in March. So what exactly the equation on that would be? But overall, if you're talking about revenue and profit, it's a beat for Aurobindo. The conference call at 8:30 a.m. commentary would obviously be the most important to determine it.
Okay, thanks a lot for that, Ekta. We'll release you from the top 10 gang to go and listen into the con call. Meanwhile, Nigel, you're watching JSPL today.
Well, Lata, yesterday, in fact, the stock was high with a gain of around 4%. The numbers look quite good, actually. You know, if you take a look at the operational performance, well, the operating profit came in at around 1,400 crores. Now, that's sharply higher in comparison to the finance costs. There were times when the finance costs and the operating profit were neck and neck. So that's good to see. In fact, the Oman business did very, very well. Over there, the steel business has been ramping up. $55 million is what they report in terms of an EBITDA. Citi maintains a buy. They're saying that the EBITDA number will start looking good as the capacity utilization levels as well will jump up. Remember, we need to keep in mind that the debt number is still at around 46,000 crores. How they bring that down will be key, but the numbers look good.
Okay, all right. Thanks, Nigel, so much for that. Let's get back to Naveen because he's watching out for these developments relating to Just Dial. Some reports suggesting that Google could want a bite of Just Dial.
Well, Surabhi, this has been doing the rounds for quite some time, almost 2-3 months in the time this has been doing the rounds. But now reports on a newspaper report suggest that Just Dial will be acquired by Google, and the talks have been going on for the last 2 months. That is what the reports have been suggesting. But remember, we just spoken to Just Dial maybe, 3 days back, wherein they had told us that they will be informing the exchange in case of any material development, and such talks are on the course. So this is what the reports have been suggesting. But on the back of this, I expect the stock to be in green today.
Okay, the stock could be in green, but you know what? This has been in WhatsApp group for last 10 days, so just keep that at the back of your mind. But anyway, United Breweries came out with very good numbers, but the stock's been falling for last 2 days, but now we have con call and a couple of upgrades as well, Sona.
Well, absolutely. Some good news coming ahead of the weekend. In the conference call, the management sounded quite confident, and they said that they have gained market share in almost all the markets they cater to, especially the bigger markets like Telangana, Maharashtra, Bangalore, Karnataka. Also, they said that the margins that they earned, that is 17% margins, they do not have any one-offs, and they're purely based on the good operational performance by the company. Also, in terms of competition, they do not think any threats from the likes of Bira, because they have come up with new launches in the last couple of months. In terms of upgrades, Motilal Oswal is betting big on the company. They see a 20% upside, and the target price has come down to 1,320 rupees. Also, they have upgraded the EPS forecast by 21% for FY20. So I expect some relief for the stock today.
Okay, all right, Sonal. Many thanks for that. Well, let's get back to Nigel. He's got another steel company on the radar. And wow, Nigel, finally you're ascribing green color to sale after earnings. Yeah,
that's right. You know, Surabhi, the stock has seen a run of close to around 40% in the recent past, maybe in the last 45 days, from 55 to around 75. The numbers look good. Operating profit came in higher. It came in at around 900 crores. So that was good. The only problem is there were some, some rumors that suggested that operating profit could come in at around 1,400, 1,500 crores. Our poll was at around 600 crores. So clearly it was better. The margins as well came in at around 6.5%. We were working with the margin number of around 4%, so that as well was good. The problem is the finance cost is still higher. It's come in at around 640 crores, though the operating profit takes care of that, so that's pretty good news. The employee cost as well spikes up. Remember, this is the 10th straight quarter that they reported a net loss, and in terms of an EV, it's close to around 70,000 crores. Even if they do an EBITDA of around 5,000 crores, still it will be trading at around 12 times EV on EBITDA, but the stock should open up in the green.
Okay.
Should open in the green, but what about CG Power and Asia?
I was struggling to give a color to this one because it can go either way. It's a mixed set. On the positive side, the standalone revenue came in line with expectations. Even if you look at the consolidated revenue growth of 18% versus 7% at what we were expecting, margins also expanded to 8.4% versus 6.6%. So looking good on those front. But if you come below the EBITDA line, that is where all the problem is. Of course, there was an exceptional as well, but the losses from discontinuing operations have increased. The losses from other associates has also increased, causing the bottom line pressure. And the reported loss came at 469 crores versus 11 crore reported last year, 11 crore loss reported last year. Even if you look at the segments, the industrial segment is not performing too well, so that might come under a bit of pressure today, but the stock can go either way.
Okay. Either ways, we'll take our pick. Naveen, why are you watching SRF?
For sure, red, Lata. If you see the revenue growth, that has been up 12%, but the margins, see, they have been doing expansion for the last 1 to 2 years, but without orders. So that has been coming to bite them back. Margins have plummeted from 21% to the 16% level. Stock hasn't done much. Gross margins, on the other hand, they have also come down from those 50% level to 45%. Why? Two key reasons. There's specialty chemical business over there. New molecules, although have been added, but no takers. That is what we get to understand from analyst con call. And the EBIT margins over there have come down from 18% to 13%. Remember, the positive commentary from the management, they have been telling that the next 2 quarters will be good, but this has been going on for the last 3 to 4 quarters. So we will have to take that with a pinch of salt. But for today, a clear red on the stock. Back to you.
Okay. Well, there may be some green on the construction stocks because of the news that our colleague Ashpreet from Delhi broke yesterday. Ashpreet, tell us the good news.
Well, yes, after a high-level meeting with the NHAI chairman and the Secretary of Ministry of Road and Transport, Nitin Gadkari, finally took a decision that there will be some partial relief coming in for all these highway construction companies. He's gone ahead and said that the notice that NHAI had given of terminating 22 projects, which includes about 20 companies like the L&T and Hindustan Construction, will be kept in abeyance till a final review is done. Now, what Gadkari has said in his directions is first that there will be a proper screening process which will be done. Each case will be heard on merit, and if there are any legal problems, then that will also be resolved. As far as those issues which are already stuck in courts, Gadkari has said that NHAI will not take a decision till any final decision comes from the court. And of course, going forward, show cause notices will be issued, and then a final decision will be taken. A final bar or notice will not be put up on the website. That's the word coming in.
Okay, so short point, you're not in default till NHAI takes a decision. You are in default only after NHAI takes a decision, which is a very big relief. Thank you very much, Ashpreet, for that.
Okay, so basically no longer big companies being barred because of previous issues that are still ongoing. All right, on that note, let's move to PTC India. How did the numbers look, Anisha?
Well, that one is powering ahead because look at the revenue growth. That has come in at 30% at around 5,300 odd crores, 1,000 crore ahead of what IDFC was estimating. The profits also took a jump of around 15%. Now, the profit growth was limited because, of course, the finance cost was higher and also because the EBITDA margins compressed a bit at 1.7% versus 2.2% earlier. That is because the other expense of the company went up. But I'm guessing it will be a strong volume number coming from management this time. We'll get to hear the numbers very soon. But as of now, it should be a green on that one.